Dear students, welcome to my channel. In continuation with the previous video, today let us discuss the third point, that is section 32, depreciation. As per section 32, depreciation means diminution in the value of asset or the decrease in the value of asset, which happens maybe because of the wear and tear, obsolescence, usage, out of fashion, evaporation, or it may be caused by their use in the business over a period of time, is spread over its anticipated life by charging depreciation every year against the profit of the business. So we can say that depreciation is a charge on the profit. It will be debited to the profit and loss account, and it is a mandatory item and it is an admissible item.
Important points for charging depreciation.
First of all, the asset must eligible for depreciation. So my dear friends, the assets are broadly classified into two categories, that is tangible asset and intangible assets. The tangible assets are again classified into building, plant, machinery and furniture. So these are the four types of assets falling under the broad head of tangible asset. Tangible assets are nothing but assets which can be seen or touched. So such assets are said to be tangible assets. Tangible assets are broadly classified into building, plant, machinery and furniture. Then the intangible assets. Intangible assets means these are assets but we cannot see or touch. For example, know-how, patent, trademark, copyright, licenses, franchises or any other business or commercial rights in the similar nature. So these are the major types of intangible assets. The tangible assets as well as intangible assets are eligible for depreciation, but land, investments and goodwill which do not qualify for depreciation.
Buildings means only the superstructure and does not include the land on which it is constructed, as the land does not depreciate by use. Building includes roads, bridges, culverts, wells and tube wells. Building need not be a full compact and independent building. It may be a part of a building also. Hotel and cinema buildings is entitled to depreciation as per the rate applicable to building and not at the rate applicable to plant. Plant includes ships, vehicles, books, scientific apparatus and surgical equipments used for the purpose of business or profession. It does not include animals or tea bushes or buildings or furniture and fittings, cables, conductors and switchboards for distribution of electricity owned by an electric supply company were held to be a plant. In a bank, safe deposit lockers and air conditioners installed are considered to be plant. Pedestal fans, sanitary and pipeline fittings were held to be plant in the case of a hotel. Membership card of stock exchange is an asset and eligible for depreciation. Suppose an assessee was doing business of aquaculture and it grew prawns in specially designed ponds. prawn ponds had to be treated as planned and the depreciation is admissible. The next point is conditions for claiming depreciation. The first point is the asset should be owned by the assessee completely or partially. The asset should be used for the purpose of business or profession. The asset should fall into any of the block of asset. The asset should be used during the previous year. These are the important 4 points or conditions for claiming depreciation.
Important points associated with the claiming of depreciation are: the asset should be owned by the assessee. Whether it is owned fully or partially, he is eligible for claiming depreciation. If it is partially owned, then to that extent or to that proportion, he will be eligible for claiming depreciation. Then the asset should be used for the purpose of business or profession. If the asset is used for the purpose of business or profession, then only it will be eligible for depreciation. Then the asset which is claiming for depreciation should fall into any of the block of asset. Block of asset means, according to section 211, the asset should be either tangible asset or intangible asset. If it is a tangible asset, it should be either plant, machinery, building or furniture. Or it could be an intangible asset. If it is an intangible asset, it could be know-how, patent, trademark, license, franchisee or any other similar type of right to do business. Then that will qualify as asset for depreciation. The land, goodwill and investments which will not be eligible for depreciation, and the asset should be used during the previous year, then only it will be eligible for depreciation. Method of depreciation is also important. In the case of assets of an undertaking engaged in generation and distribution of power, depreciation may be claimed at a prescribed rate on the actual cost thereof, which means the power generating and distributing industry shall apply the method of depreciation, that is straight line method, but all other type of industries has to adopt written down value method for computation of depreciation. The next point is non-admissibility of depreciation. See, even the computation of depreciation is a mandatory item. Sometime, in some cases, the depreciation may be not admitted. Let us see under what circumstance the depreciation is not admitted.
If a motor car manufactured
Outside India is acquired by the assessee after 28th February 1975, but before 1st April 2001, no depreciation allowance will be given on it unless it is used for the following purposes. That is, 1. As a taxi on hire for tourists, or it is used outside India in his business or profession carried on in another country.
if any motor car manufactured outside India
Is
is
acquired after 31st March 2001 and used for business or profession of the assessee in India, the depreciation shall be allowed on such a car with effect from assessment year 2002 to 3. No depreciation is allowable if the actual cost of any machinery or plant is allowed as deduction in one or more years under an agreement entered into by the central government under section 42. See here, suppose the assessee has received allowances from any source based on the agreement entered into by the central government, and basically the assessee not having any cost incurred or have received the subsidy or concession, then depreciation cannot be charged on that particular asset. Asset acquired and put to use during the previous year. In the case of an asset acquired and put to use in the business during the previous year, only 50% of the normal depreciation will be allowed if it is used in the business or for less than 180 days during the previous year. See, which means if the asset put for use for less than 180 days during the previous year, the assessee will be eligible only for 50% of the depreciation. To claim the full depreciation, the asset must put for use for more than 180 days during the previous year. The provision is applicable in both the method of depreciation. See, this condition is applicable whether it is straight line method or under the written down value method. Next is depreciation allowance for a rented or a leased premises.
No depreciation allowances is permitted
On a building taken on lease or rent and used for the purpose of his business or profession. But he will be eligible for higher charges or lease charges paid on. Where an assessee incurs capital expenditure on the construction of any structure or renovation or extension of or improvement to any building held by him under a lease or other right of occupancy and used for the purpose of business or profession, he will be eligible for the grant of depreciation in respect of such capital expenditure as if the structure or work is a building owned by the assessee. The next point is treatment of assets acquired under hire purchase scheme. If an asset is acquired under hire purchase agreement and the effect of the agreement is that the ownership is at once transferred to the lessee, the lessor obtains a right to sue for arrear of installments but has no right to recover the asset. Such a transaction should be regarded as one of purchase by installments and no deduction in respect of hire should be made. But depreciation should be allowed to the lessee on the entire amount of purchase price as per the agreement.
if the terms of agreement provides that
The asset shall become the property of the hirer only after payment of all the installments. The transaction should be regarded as one of the hire purchase.
in such a case
Depreciation should be allowed in the first year on the estimated full initial value or the cash of the asset. So far as the hire is concerned, it is also to be allowed as deduction. The amount of hire shall be the difference between the aggregate amount of the periodical payments under the agreement and the cash price. So the difference between these two values would be considered as hire charges and it shall be deductible. The differential amount will be spread evenly over the term of the agreement and in each assessment year the amount determined by spreading over will be admissible as hire for the concerned assessment year. The excess price over the cash price has to be absorbed as higher charges evenly spread over the terms of the agreement. Change of ownership under section 47 subsection 13, 47(14) and section 170. If during the course of a previous year there is a change of ownership otherwise than death under sections 47 subsection 13 or 47 subsection 14 or 170 or on account of amalgamation or demerger of a company with another company, depreciation shall be allowed to the predecessor and the successor in proportion to the period of owning the asset by each of them. So here the ownership is changing not because of the death but because of the terms of amalgamation or terms of demerger. Both the predecessor as well as the successor company would be eligible for claiming depreciation depending on the period of their holding. In any case, the aggregate of the amount of depreciation allowable to the predecessor and the successor shall not exceed the deduction which would have been allowable had there been no change in the ownership during the previous year. So which means the total depreciation could be provided to the predecessor company as well as to the successor company on account of the demerger or acquisition of ownership change. So the total depreciation cannot be exceeded, but it can be apportioned and given to the two company, which means the predecessor company and the successor company. Hope it is clear. And the last point is mandatory charge of depreciation. Whether the asset is really utilized or not, if it is put for use, it is mandatory to charge depreciation. The amount of depreciation shall be deducted while computing the business income. Whether or not the assessee has claimed the deduction in respect of depreciation is immaterial. It is a mandatory charge on profit for the previous year if the asset which is put for use. So these are the important conditions for claiming depreciation as per section 32 of the Income Tax Act. I hope you understood the concept. So the remaining part, that the computation of depreciation etc. and the rate of depreciation including the investment allowances, will discuss in the upcoming videos. If you are watching my channel for the first time, please subscribe. If this video is useful, please share with your friends and other students. If you have any comments, please give it in the comment box. Thank you very much for watching my channel.